Let's be honest, for the last couple of years, it has felt like we are living in the age of AI. The hype has been absolutely relentless. We're talking staggering valuations, product demos that look like science fiction, and just this constant promise that a revolution is right around the corner. But what if, just beneath that super shiny surface, the foundation isn't quite as solid as it looks? What if the numbers that we're all so impressed by are actually hiding something? Because once you start to really dig into the details, you find some inconsistencies, some really worrying signs that suggest this whole historic boom might be built on something a lot less stable than we think. So, let's open up the case file. Our investigation is going to start with the numbers themselves. We'll call this evidence file number 1, the fuzzy math. Okay, check out this number, 6 million. NVIDIA, the company basically powering this whole AI revolution, they claim they shipped 6 million of their most powerful Blackwell GPUs last year. That is a massive figure, but there's a problem. And this is where it gets a little weird. The claim is 6 million GPUs shipped, but the reality? There just hasn't been enough new data center capacity built. The actual physical space with enough power and cooling to run all of that hardware. It's like, where are they plugging all these things in? The numbers don't seem to connect. And it's not just the hardware numbers that feel a bit off. The revenue projections for the big AI labs, well, they're also raising a few eyebrows. So what's so interesting here is this huge gap between the ambition and what's actually happening. You've got Anthropic claiming it's getting close to a $10 billion revenue run rate. And then you have OpenAI, the biggest name in the game, whose massive $13 billion goal is reportedly going to be missed by several billion dollars. The point is, these are fantastic headlines, but the performance isn't always living up to the hype. All right, let's move on to our next piece of evidence. Evidence file number 2, the panic behind the progress. So the pace of innovation looks incredible, right? But just look at this sequence of events. Google launches a really strong new model. The response from OpenAI, they immediately declare a code red and scramble to rush out their own new model. This doesn't really look like calm, methodical innovation. It looks a lot more like a reaction that's driven by fear. And we know just how seriously they're taking the competition. An internal OpenAI memo actually admitted that Google's new model could create, quote, temporary economic headwinds. Now, that is some serious corporate speak for this is going to hurt our bottom line. Which, leads to a pretty critical question. Is all this frantic activity a genuine race to innovate? Or could it just be a convenient way to distract everyone from reports that user growth for products like ChatGPT was already slowing down before all the competition heated up? This brings us to what might be the most important question of all. Evidence file number 3. Is anyone actually buying this stuff at scale? Just take a look at Microsoft's Copilot. It's one of the biggest pushes for enterprise AI in the world. They have this massive, captive audience of over 440 million Microsoft 365 subscribers. And yet, out of all those people, only 8 million were actually paying for the AI add-on. That is a huge, huge disconnect between the potential market and who's actually buying. And the signs of this soft demand just keep piling up. You hear that sales teams are missing their AI growth targets. Customers are bulking at the high costs. Microsoft is even resorting to discounts and has faced a lawsuit over allegedly misleading subscription tactics. The main takeaway here is that big companies are not just rushing to write blank checks for this stuff. But wait, I hear you say, what about all the blockbuster investment deals we keep hearing about? Well, that leads us right to evidence file number 4, a flood of maybe money. So you might remember the headlines about a massive NVIDIA investment in OpenAI. Well, here is the actual language from NVIDIA's official SEC filing. It says they entered into a letter of intent with an opportunity to invest. The wording there is very, very specific. So what the heck is a letter of intent? Well, it's basically a handshake before the real deal gets made. It's a preliminary understanding that is, and this is the most important part, generally non-binding. It is not a done deal. It is not cash in the bank. And Anthropic, the company that's often called the more efficient competitor, tells a pretty similar story. They are raising absolutely colossal sums of money, but they are also burning through it at an incredible rate. I mean, just look at this timeline for a single year. They raised $3.5 billion, and then just a few months later, they need $13 billion more. And they're saying they're going to need another $15 billion on top of that. That isn't a sign of efficiency. It's a sign of a desperate need for cash just to stay in the race. So, after we've looked at all the evidence, what's the conclusion? It seems like we might be looking at a foundation that's built on, well, vibes. Let's just recap the cracks we found. The math on hardware and revenue seems fuzzy, the development feels more like panic than actual progress, real-world customer demand is way softer than expected, and those massive investments, they're often just non-binding agreements, all while the cash burn is just completely unsustainable. And this really gets to the heart of the issue, right? The entire AI industry is being propped up by this story of infinite growth. But when you look closely, that engine seems to be running on hype, headlines, and vibes, not on solid, profitable customer revenue. Look, an industry that's built on this kind of hype is thrilling. There is no doubt about that. But it leaves us with one final and really critical question. What happens when the bill finally comes due and reality checks in?